Okay, good morning everyone and welcome to the Financial Juice live stream. So one of the bit of news that I wanted to start off with, of course we have the ECB rate decision coming out pretty soon at 7:45 a.m. Eastern Time. They are expected to keep the ECB refinancing rate on hold at 0% and also the ECB deposit rate on hold at minus 0.50% as well. Now, one of the key things that I just wanted to show you guys is this article here. So what we're seeing here is that the ECB is already pumping cash at a record pace, and the ECB is under pressure again to act. So hence the title of the article of the video here, Spare Some Euros, Mum. That's the title that we're using here as how much cash will the ECB chuck at the euro. Now, what it says here in the article from Reuters, it says that as it prints cash at a record pace to soak up ballooning state debt during the coronavirus pandemic, the ECB is on its way to exhausting its quota of bond buying early, even as economic data underperforms already depressed expectations. So don't forget that the ECB expanded their bond buying power by 750 billion euros, and that's something that is expected to be eaten up quite quickly. And there's not much of that money left, as if you were listening to our Squawk service or reading our headlines, you would have seen that there were a lot of headlines coming out from the ECB of buying bonds and buying debt to keep everything afloat. So again, that's one of the things just to keep an eye out. The ECB has already deployed 125 billion euros, in dollar terms, $135.7 billion to buy assets in just the past 4 weeks. Yet it's still struggling to bring down the borrowing costs of the bloc's lowest rated governments, suggesting its 1.1 trillion euro firepower could be exhausted by mid-autumn. So I just wanted to show you an image just to show you what the stimulus looks like in comparison to other years. So just bring that up for you here on the chart. Okay, so this is what we can see so far. So back all the way in 2015, we'd seen not so much of asset purchase buying going on. 2019, we can see a little bit. This is, of course, before ECB's Lagarde had come in and taken over as the ECB president over Mario Draghi, who was considered as Mario. But what we can see here, the main area here is the amount of emergency bond buying that's expected to go on later this year. So by mid-autumn, their economists, according to Bloomberg, a survey of economists, they're expecting the EU or the ECB to have bought up to 1.5 trillion euros of debt altogether. So this is quite a significant amount when it comes to what else can the ECB do if they're going to if they kept rates on hold in the previous ECB press conference. What are they going to do this time? Well, this is the only other thing that they can do is to buy bond. From what we've seen so far, is to buy bonds and just keep that going. But how long will that go for, and what sort of strain will that put on the ECB? Here are the different case scenarios. So if you've got the ECB pumping in a lot of money to buy these bonds to keep economies afloat, so we're not the USA where we're keeping one economy afloat. If we're keeping economies afloat within the ECB of the low-rated ones, let's say Italy, Greece. Italy recently has been regarded as rated as a low economy. if we see more buying of those sort of debts of the smaller economies that are struggling, what happens when those companies come out of the lockdown situation, or they come out of the pandemic situation, and they're able to start bringing people back to work? Thing is, those countries are going to have a lot of debt to pay off, and in the European Union, for those countries, if you're part of the European Union, all debts are managed as one debt for Europe. So those countries may be harassed or pushed by other northern countries such as Germany to say, right, look, you've got a lot of money to pay off. You've got to make a commitment to somehow pay this money off in some form or way, which will put pressure on those countries, and then could lead to a downward fall in the country's economy altogether, which is quite negative. On the flip side, though, you could have where these countries, smaller, low-rated countries, are given this money to stay afloat, and then there is a form of plan where these countries slowly pay off that debt that they've accumulated. So one case scenario would be negative, where they would be forced to pay off quite a bit of the debt that they've borrowed from the ECB. But the positive case scenario is where if you do see these countries being forced to pay their debt, or quite a bit of debt, then you could see a potential crash in those economies, which could lead to a crash in the European Union, and then would lead to a continental crash in Europe as a whole, right? So, on the flip side, though, if these countries are made to pay their money back in smaller installments, if they can't manage the high amount of loans or loan payments, then that could be a positive. It would keep those economies afloat. 2, it means that those countries that are afloat can manage their finances easily without too much pressure. And 3, for the European Union and Europe as a continent, it means that they're okay. It doesn't lead the path towards complete capitulation of the European Union, or it would be less likely so in that case scenario. Okay, so let's go to some other. So this is what we have in regards to the ECB. For today, what we do have is some move. We are waiting, as of course, some commentary and from the ECB press conference later on today as well, and statement. This is one thing that I wanted to show you guys as well from ING as to what they call the ECB containing Euro risk premium. So this is how ING are positioning, or these positioning for Lagarde's alternatives during her speech. So I'll just bring up this article here. So what it says here is that this shows you how to position yourself for her speech. So you can see here the base case scenario. It tells you when and where the euro would likely move. So you can focus on what you need to hear. So as we can see, the current stance of it is over the medium term, inflation is expected to increase. Growth outlook, the risks to the growth outlook are clearly to the downside, and so on and so on. Again, you can look at the current base case scenario of where ING are looking or are seeing the euro heading towards. It is currently sitting, as I just showed you, at around 108 at that level there. So if we're getting to 109, that's quite a significant move. If we're talking about getting to 109, so there, well, it's not. It is a bit of a move in the short term. Again, short term effects don't tend to last for too long. But again, we'll see what happens in the market reaction from ECB Lagarde's speech. So this is what we see. This is a positive case scenario and a really positive case scenario for the euro. If we're talking about the movement, if we're talking about upside movement, would be where we get comments such as here, again saying the large decline in risk premium. It's saying risks to the inflation outlook are balanced, risks to economic outlook are balanced. Basically saying that everything's back to normal. Okay, and that the ECB doesn't have to do too much to keep the economy afloat, other than here, what it does say is that QE to stay beyond 2020, but lower bound for rates likely reached. And risks to economic outlook are balanced. Euro 750 billion top up, bank bonds and fallen angels buying. Again, is showing that that amount of buying is not needed by, or QE is not needed by the ECB to provide to the European, to provide to Europe. So it keeps them safe, meaning that everything is back on track. Okay, let's go back to the charts, and I'll bring up another article for you guys for us to look at. So one of the things, so going away from the ECB, okay, and moving towards America. So Fauci, Dr. Fauci, top NIH official, says that the leak concerns fueled his White House revelation of Gilead drug results. So he said that the Gilead drug results were positive. So Gilead, ticker GILD, that there was some effect of it stopping the coronavirus. Here's the thing. One of the bits, the issue is it's not been done in a proper controlled environment, right? Where you've got patients who have been given a placebo, then you've got patients who have been given remdesivir. Remdesivir was listed or known or said to be a drug that has no real effect, and doesn't combat coronavirus in any way. So this is quite surprising to see Dr. Fauci, the top NIH official, who's been aggressive towards Trump and has acted in the opposite way to Trump, and when it comes to talking about remdesivir and its efficacy or its effectiveness. But then here you see a slight change of rhythm. Here's the issue. Results from a third study in China suggesting remdesivir failed to help COVID-19 patients were released in the British Medical Journal in the Lancet after review by a group of scientists. So this is something that we had seen a couple of days ago, of the Lancet with the group of scientists talking about the effectiveness of remdesivir. You've got a lot of headlines coming out of positive news from Gilead Sciences saying that they're pumping out this many pills, or the remdesivir, is having an effect. Issue is there isn't too much testing that's happened. From the preliminary test results, the difference between people who would die without the remdesivir without the remdesivir drug, and the people who would die with the remdesivir drug, there's a small margin. I believe it's about 8% of people who took the remdesivir drug had experienced fatality, and about 11% of people who didn't, or of the test, who didn't take the coronavirus or the remdesivir drug, had experienced fatality. Now that's a very, very small margin of error there. Even though about 3% difference, that's still quite small. We've got to see what I'm saying is, if you're looking for real reaction, you've got to look for one, a drug that is proven by medical researchers as a drug that is effective. So, as I said, the Lancet, that medical journal by the British, proving that there is a drug that can work. If they say that, yep, there is a drug that can actually stop the coronavirus, and we've seen numbers in tests of them saying that there is a big difference in percentage-wise of people taking a placebo and the actual drug, then that's something that's going to be really, really positive. But again, a lot of this is being peddled out by the Trump administration and the FDA now, and also the NIH. So we'll see how that plays out. Again, if we're looking for reactions, Gilead Sciences is going to see more of the reaction there, simply because of the optimism that surrounds it, or surrounds the company at the moment. Okay, let's go to another article. So, US stock futures rise after solid tech earnings, and Facebook is up more than 10%. So Facebook soared more than 10% in overnight session after it reported that after an initial pullback in advertising revenues in March, thanks to COVID-19, it's seen sales stabilize in the first 3 weeks of April. It reported first quarter per share earnings of $1.71 and revenues of $17.74 billion. Microsoft also rose about 2.15% in the after hours trading, after they reported fiscal third quarter sales growth of 15% thanks to the growth in its cloud business. The software giant said in a statement that the disease had a minimal net impact on the total company revenue in 3 months ended March 31st, but cautioned that the effects of COVID-19 may not be fully reflected in the financial results until future periods. So what I'm always saying here, of course, if you've got big tech giants such as Facebook and Microsoft leading the way, what does that do for other US futures? Now, if we looked at the charts, and let's have a look at the ES, let's have a look and see what we have there. At the moment, we are moving. So this is our 200-day moving average. This is the current reaction that we can see at the moment, where you're seeing a movement back towards the upside. Again, we have pushed our level through our level of resistance here. We are just edging through 2,950, and then that's our last bit of resistance before we have a big old band of resistance to reach at 3,000. But this is where we currently sit at the moment on our 200-day moving average, where we are moving past that. So the 200-day moving average just shows the strength of a certain asset class. Okay, and this is something that everyone should know if you're going to be trading US futures. If not, or even if you are trading, let's say any asset class, right? Then you use this to determine how strong is the movement on a currency or asset, and this is what it shows you. So we're still below the 200-day moving average here, so still not out of the woods yet. And that's, again, even though we do have a positive news coming out from the markets of earnings, we've still got quite a long way to go. So again, just to keep that, stay vigilant as to what we could see happening. If we just zoom out there, so just stay vigilant. So here we've seen that little bit of a tick up in US futures on the ES. If we looked at the Nasdaq, there we go. Okay. All right. So as we can see here, the Nasdaq also experiencing some nice movement towards a bit of some positive movements towards the upside. This we see that we have this gap here that's opened up of about a 0.20% movement upwards, which is quite a significant. It is a significant amount there. If you're trading on the intraday chart in the after hours, that's a bit of a nice move there. But again, positive reactions from US futures, so they're leading the way at the moment, keeping things afloat. Okay, thank you very much for listening to the Financial Juice morning briefing. Do look out for positive comments, or look out for the comments from ECB's Lagarde, and we'll keep you posted. Thank you very much. Okay.